Hello, good evening, everyone. Welcome to another panel of the International Week. My name is Jenny. I am a strategist here at XP, and we are here tonight to talk about Chinese equities. So we have two specialists in Asia with us to share their perspectives in China. But before I introduce the speakers, I just want to remind everyone that if you missed the previous panels, they're all available in our website and also on YouTube. And also, if you want to switch the languages between Portuguese or English, there are two links in the platform as well. We will also be sharing a QR code on screen if you like to send any questions. And for those who are watching on your cell phones, the links will be available in the platform as well. So tonight, we have two Asia speakers. Please welcome Tai Hui. He's a Chief Market Strategist in Asia at JP Morgan. And we also have Pruksa Iamthongthong. She's a Senior Investment Director at Aberdeen. Hello, Tai, Pruksa. Thank you so much for your time. It is a pleasure to be able to moderate this panel with both of you.
Hi, good evening. Thank you for having us.
And also good morning for you guys, because I know it's very early for where you are. So we really appreciate and thank you for your time. So let's start with a few questions that I have prepared. I wanted to start with the topic of 2021 performance of Chinese stocks. So back in 2020, China was the first economy to be affected by the pandemic and also the first economy to get out of the crisis. And I think as a result, Chinese equities had a tremendous run last year and was the best performing market among the major ones. But in 2021, markets have disappointed investors so far. So my first question for Tai, can you go over maybe the reasons behind this underperformance this year and what can investors expect for the rest of 2020?
Well, I think you mentioned a few important points for the Chinese market. First of all, I think there is some degree of profit taking after a really strong run in the Chinese markets since the pandemic came under control. That's the first part. The second part, I think, is also to do with the fact that the Chinese economy has really made a very strong recovery in 2020, one of the only major economies in the world where they managed to post a positive GDP growth. And as a result, the central bank and the governments are expected to gradually normalize both monetary and fiscal policy. And I think that made investors a little uncomfortable. So that again prompted some degree of correction. And finally, obviously the Chinese market, especially the offshore markets, does have a fairly significant weight in the tech sector. And we have seen some regulatory changes in the technology sector, whether it's antitrust or regulations on fintech, and both of which have put pressure on the tech sector, which obviously add additional pressure on the overall index. So I think it's both a bit of a technical factor in terms of profit taking, but also monetary policy normalization and also the government regulations on technology.
Okay, and you mentioned offshore markets. Just to clarify to the audience, offshore markets are the equities that are traded in Hong Kong, right? Which are where most tech companies are negotiated.
Exactly. So both in Hong Kong and also in the US to some extent. But at the same time, we've seen a relatively sluggish markets in onshore in Shanghai and Shenzhen as well. So I think all the factors that we've mentioned, they do play a role.
Okay. And for Pruksa, do you have any short-term views for China for maybe 2021 or maybe over the next few months? What can investors expect?
Sure. As you know, we are long-term investors, but we do have short-term views as well. And I suppose the question is, why now when you link to the shorter-term views of the market? And I think post this correction that we see and the underperformance in year to date so far, post Chinese New Year, while the attraction in terms of the valuation of the Chinese market has become relatively more attractive. So to give you an example, the China onshore market today is almost 50% cheaper than S&P 500 on a price to book basis, and on a price to earnings basis, this is about almost 30% cheaper. So from a valuation perspective, post correction, it is looking at a pretty attractive entry point. Now, if you were to look at the fundamental basis, we are actually seeing a very supportive picture. So as Ty mentioned that in 2020, we have seen a strong recovery. The good news is this recovery continued to strengthen into 2021 year to date. So when we look at the earnings of the companies that we cover and we invest in, I would say that the earnings recovery has been strong. And this is actually happening across all sectors as well, leading with the industrial sector, industrial automation, etc. And I think post the industrial recovery, we are now seeing that recovery in terms of consumption and services. So we are looking at a pretty supportive picture from both a valuation perspective and a fundamental perspective. Now, investment in China is not without risk, as usual. So there's about 2 or 3 risks that we should bear in mind. The first is inflation risk, which looks manageable so far when we look at yesterday's numbers. But the PPI is actually increasing really rapidly in China. How would that translate into inflation down the road is something that investors have to be mindful about. And the second risk would be in terms of financial risks, where over the course of last year, even though China has been more disciplined in letting out loans to troubled companies, we are still talking about 30% kind of SME loan growth over a difficult time period. And a large part of that roll off this June, which is where we are today. So financial risk would be something that we got to be mindful about, but short-term wise and actually long-term wise, we are both positive.
Okay, so since you mentioned that you're positive over the long term, so what are the long-term investing themes that both of you are excited about in China? Maybe Pruksa, do you want to start?
Yeah, sure. I think we are seeing very long-term structural growth opportunities in China. We can divide them into 5 buckets, the 5 mega themes, if you like, and some of them will be very intuitive to you. So the first would be in terms of aspiration. And aspiration in this case would be consumption, premiumization of consumption, so goods and services from that perspective. So this is very intuitive. The second would be in terms of digital future. So these will be companies that helps to digitalize the economy. And I think this is where we have seen a rapid acceleration in terms of penetration happening in China during COVID and elsewhere around the world, as we all know as well. The third bucket would be in terms of health and services. So as consumers get richer, as China gets older, demand for healthcare and better services will also emerge. The fourth would be wealth management. So again, as people get richer, there'll be more demand for consumer services, there'll be more demand for wealth management, as well as long-term life insurance policies where penetration remains low. And lastly would be going green. And I think this is where we actually saw an inflection point last year as well. Firstly, when the Chinese government has announced their 2060 carbon neutrality target, that was an inflection point. And the second inflection point as well over the course of last year is that we saw something called grid parity, which means that the cost of building a solar power plant today is going to be as cheap as building a coal power plant, which means that this sector no longer is dependent on subsidies, which is a healthy development in China. So to hit the carbon neutrality target in 2060, we are likely going to see huge investment opportunities in terms of solar and wind energy at least. And to give you some figures, that means that your solar installation would increase by 14 times from 2019 to 2060, and wind would increase by 7 times. So you can imagine all the investment opportunities in between, not to mention the other decarbonizing pathways like electric vehicles as well as gas in China. So yeah, very, very exciting long-term structural themes.
Perfect. And Ty, do you have any long-term themes that you guys are excited about at JP Morgan?
I think Khun Pruksa has really touched on most of the interesting themes and sectors that I fully agree with. Whether it's the upgrade in consumer spending from goods to services, so wealth management, education, healthcare, absolutely, I totally agree with that. The green developments, the cutting of greenhouse gases, that even though we might touch on it a little later, but I think that investment is really important, and not just for China to meet its carbon emission target, but also export some of those to Asia and the rest of the world. And again, the technology developments, that's very much a key part of the latest 5-year plan, where, because of the US-China relationship becomes still quite strenuous, China really needs to become more independent from US software or hardware. I think that, again, will be an emphasis where a lot of resources will be poured into. But maybe I'll just add 2 areas where I think is interesting for investors, whether it's in Brazil or around the world. Number one, I think the capital market in China is opening. And we've seen a very steady and very sizable flows into the Chinese equity and also the fixed income market. So from that perspective, one of the themes, not just about the economic development and structural development, which I think is absolutely crucial, but at the same time, there is a trend where a lot of international investors are looking into China, especially the markets in Shanghai and Shenzhen. That's number one. And number two, I think from a portfolio construction perspective, again, the onshore markets in Shanghai and Shenzhen plays a very interesting role, because if you look at the relationship between the A-share markets in Shanghai and Shenzhen versus the rest of the world, the correlation is still relatively low. For example, if you look at the Hong Kong market or the Asia market, its relationship with US equities is about 60%. The correlation is about 60%. But the onshore market in China, it's about 25 to 30%. So by investing in the onshore markets in Shanghai and Shenzhen, it does achieve to some extent the effect of diversification in portfolio construction. So the structural themes is one really attractive point, but also I think it's worth thinking about the role of Chinese equities can play for investors around the world as part of their portfolio construction.
Okay, perfect. Going back to the going green topic and the ESG topic, I guess one of the pillars of economic growth in China over the next years is based on energy transition. And it is a theme that's gaining traction everywhere around the world. But the goal that China has set, right, to become net zero emission by 2060, is that too ambitious? Maybe, do you think that China is on track to deliver that by 2060? Maybe Ty, if you want to try to answer that.
Sure. Look, let's not underestimate the difficulties in achieving carbon neutrality by 2060 in China. Because a couple of things. First of all, China is still highly dependent on coal and fossil fuels for their energy production or power production. And turning that around is going to require significant investment. And the second point is, Pruksa talked about a lot of the exciting opportunities in electric vehicles, solar, wind power, which I completely agree with. But there are going to be sectors where they need to really tighten up in order to reduce carbon emission. Power generation is the clear industry, but areas like cement making, steel making, which China has a huge role to play in the global economy, these are some of the areas where you can't just switch from one way of producing power to another. The chemical process of making cement and steel produce a huge amount of carbon dioxide. So how do you use technology or other ways to address that issue without creating social challenges such as unemployment or factories closing down? I think that's going to require a lot of clever policy maneuvering. So I just want to put it out there that I think it's great that aiming high, but it is a difficult task. But at the same time, I would say if anybody can be close to achieving that target, I do think China is one of those countries that have a good chance of success. Why? Partly because the government structure means that maybe there's a less of a political debate, right? You're not have to go through a huge amount of debate where different stakeholders have an influence in lobbying the parliament. In some ways, if you look at a lot of the structural changes in China, when there is a directive from the central government, it gets done. So I think from that perspective, if we all agree that that is the right thing to do, then I think the political obstacles or the resistance is going to be a little bit less compared to some of the other countries around the world. So I think from that perspective, the political structure in China does provide a more favorable backdrop in actually achieving such an ambitious target.
Sorry, I was on mute. Thank you. For Pruksa, also still on this same theme. So more from a bottom-up perspective, are you seeing any changes, or how are you approaching ESG? And then there is one question here on online on Slido that people are asking. We've talked about, I guess, a lot on the E side. Are you seeing anything on the S or the G side as well?
Certainly. So let me address the part about how it's changing, and then we can move on to the various subsegments of E, S, and G. And the topics are really different from each company to each industry. So I think overall we are seeing a really rapid change in China from a bottom-up perspective. And let me share you two perspectives, one from an industry level and one from the company's level that we speak to. From an industry level, I think we are seeing rapid change where the ESG issues of yesterday in China is not the same as ESG issues today in China. And you can imagine this is really because as China moved their model from very much an export-led economy to one that is gradually more driven by consumption and services, it also means that China is very much as much a digital economy as a still economy. So you can imagine that we are no longer, or less so, talking about whether the factories are discharging wastewater into a river, are they treating it properly, but it's so increasingly more about the power usage efficiency of data centers, for example. So, more recently, Beijing government has issued a draft consultation where they basically say that if your PUE of a data center is not meeting 1.3, and this standard is actually lower than the US, and the lower the number the better, which means that your data center is actually more power efficient. If it's lower than 1.3, you cannot build new data centers. So you can see how China is increasingly really tightening this up from an E perspective. As your economies increasingly get more digitalized, you will need more data centers to power that, and you also need actually more efficient data center to power that from an E perspective. Now, if we were to look at the company's level, then again, I think the way that we approach companies within ESG is quite different today from, say, 5 years ago. So 5 years ago, when we, I think, started our push on this topic, especially in onshore China, we were spending a lot of time on the education part, and that means that we spend a lot of time explaining what ESG is about, but more importantly on the why is it important to you, as well as especially on the how, because even if they get why is it important, they don't know how to do it. So we actually spend a lot of time, and we position ourselves as the partners to these companies, and make sure that we share the best practices that we've seen across the region, sometimes from developed Asia, where I think Singapore and Hong Kong do know this pretty well, and sometimes from elsewhere around the world. And I think to our surprise, we have seen, when we fast forward to today, Chinese companies are no longer talking about what is ESG, but they are talking about, okay, we get it. Now we would like to come to you as a sounding board, as long-term investors. You'll be talking to us about this, and whether we can get more advice from you. So one example I can share is our engagement experience with a white goods appliances company in China. Part of their business is selling product is actually washing machines, and we have been proactively approached by them. And this is post after their discussion with a Chinese university that talk about microfiber. And to put that into perspective, microfiber, if it gets washed from your clothes and it gets into the marine, it actually impacts the E part, and it can actually impact the marine life. So in this case, what we did was we actually linked them up with an NGO who is a more expert person in this topic, and we collaborate with them. And essentially what that results in is that the company decided that, hey, we are going to do more R&D on this topic, and they develop what you call a microfiber filter, and you put that into the washing machine so that these microfibers are filtered out. And that is how I think companies in China are actually translating the ESG concept into commercialization. And this is, our engagement pathway with them. So yeah, that's one of the positive examples. But I think fair to say that there is a wide spectrum within China. So not all companies are as progressive. So this is the E part. G, we have been having, I think, a very, very long conversation with them. G is always something very important in China. And that's really because even when we look at state-owned companies, for example, then we talk about, alignment of interest with minority shareholders like us. Do you have options and ESOP schemes to incentivize your management to have the same alignment? And if you look at private companies, then it's going to be about, okay, you have all these businesses in your listed company that we invest in. Now, do you have a side business elsewhere that sits in your own private company? And are you disciplined about your capital allocation? Because in certain times, we are seeing that, you have a good core business in listed company. And then when the property market goes up, there is a temptation to take some money to invest in the property market. And sometimes that using the listco company markets, the listco cash flow, or they pledge their shares in the listco and use the money to invest in private property deals, for example. So that's something that we are very mindful of with regard to proper disclosure of related party transaction, knowing who the shareholders are, their track record. And I think on the S and social side, then is to do with the manufacturing supply chain, where we got to be mindful of labor management, talent retention, and also, rules around modern slavery as well. So all this goes down to each individual company's level that we engage in. So I would say that the topics are varied, and we go down to the details and try to drive positive changes to these companies that we invest in.
Perfect. Thank you for the examples that you gave to show us, how we can approach E, the S, and the G when looking at Chinese companies. I think that's very clarifying for everyone. Now, going back to the topic around regulation that Tai mentioned earlier that's impacting equity stocks, especially tech companies, like offshore tech companies, right? So Tai, does this increase in regulations affect your long-term investment thesis at all, since they are affecting these big tech companies in China?
I don't think so. I think, the long-term thesis and the themes is some of the areas that both Pruksa and I just mentioned. For example, how consumers are changing the way they behave and they spend, the digitization and the developments of technology. I think, in any markets, whether it's in China or in the US or in Europe, around the world, regulations are always evolving. Right, we are now talking about a global minimum tax. Now, whether that will come through or not, who knows? But I think in the case of China, the two areas that we've seen a lot of regulatory attention, one is on antitrusts or monopolistic behavior by some companies. The other one is on greater regulation on fintech. Now, the issue with fintech is, I think the authorities are trying to stamp out regulatory arbitrage by some of the fintech companies. So instead of being just the middleman connecting the borrowers and the lenders, I think the regulators will prefer them to have a bit more skin in the game, a bit more at stake. So the level of capital requirements, they need to behave a bit more like a traditional financial institution. So I think the starting point is they do want to make sure that by having these innovation, it doesn't increase the level of systemic risks in the financial system. So I think from that perspective, you can argue whether it's too much or the right amount of regulation, but that was a starting point from a regulatory standpoint. With the antitrust's direction, again, we've seen something similar in Europe, in the States with some of the tech giants, how they process data. I think all of that is going to continue to evolve the landscape. And, as Pruksa mentioned just now, she's absolutely right. The valuation of some of these tech giants are now looking quite attractive for the first time in many years. And don't forget, these tech giants are able to discuss and shape policies with the policymakers, with the authorities, and really trying to move in the right direction. So I think these are just, in my view, bumps on the road rather than completely change or undermine the investment thesis of these companies. And if anybody can really come out of this in good shape, I do feel genuinely confident about these tech giants.
So it's the same conversation that we're having regarding like Amazons and Apples in the US, right? They're all going through rising regulations. So it's as a similar story. And then for Pruksa, since I think you look more on the, the bottom up part of companies, are you seeing these regulations affecting the short-term profitability of them right now?
Yes, I think they are, and I think it's quite understanding as well, because currently the regulations are relatively unclear at the moment, and we are sitting right here, going right through the regulatory changes. So from a company's perspective, we are seeing two key changes in the way that they adapt and evolve as per what Thai say. And the first would be, well, they are trying to understand what these regulatory changes really mean. And once they understand that, that would mean that they would think about the next step as to how they are going to evolve their model as a result, business model as a result of the changes. And what this all means is that we are very likely to see a slower pace of growth in the short term as they evolve their business model. And I think one that we have seen that's coming through is actually an increase in investments. And when you look at the latest earnings results of whether you look at Tencent, Meituan, Baba, they are all talking about increase in investments. Some of them are related to these regulatory changes, and some of them are really because they are investing more as they see and opportunities that are opening up as a result of an acceleration in different parts of the digital economy because of COVID and the future as well. So that's some of the changes that we are seeing in terms of impact on shorter term profitability. But I do agree with Thai and the points that he made as well, that this should not impact the long-term investment thesis of the company and the overall industries, and that the regulations that we are seeing today is a catch-up in terms of regulation. It's not uniquely China as well. And as the digital economy evolves really fast, the evolvement of the regulatory environment would have to catch up. And then it comes down to good stock picking and making sure who are the ones that can actually have the strength and competitive advantage to be able to catch up with the evolving regulations. And I think the overall riding understanding here and the thesis is that we don't think the Chinese government, with all these antitrust and regulatory changes, is looking to kill the innovation, and they are also not looking to nationalize the internet economy. And I think that's really because they realize that this is much more efficient to leave it to the private players to be able to create the innovation in this space. And the growth of digital economy is actually part of the 14th Five-Year Plan as well. So it's very much aligned with the Chinese government as to how they want to grow in these industries. If we were to, again, break things down as to what they are trying to achieve with all this, I think I can summarize it in 3 points. First would be consumer protection. Secondly would be in terms of sustainability of growth, simply because it was growing too fast in many directions, you need some sort of regulation. And third will be risk management. And that's where I think a lot of the fintech regulations comes in, because they would like to control some of the consumer leverage that has been growing really fast because of the middleman model as well. So when you put that all together, it's really positive for the long-term development and sustainability of the healthy growth of the industries, but no doubt you will have a short-term impact, which we think that a lot of that is reflected in the valuation today.
Got it. So over the short term, I guess we can expect some volatility, but both of you still believe in the long-term themes around the consumption and all the technology growth over the next couple of years. And talking about technology, I guess this is also the big theme between US and China tensions, right? Going back a couple of years, global markets were pretty much caught in between the trade war between US and China. And I guess under President Trump's presidency, the relationship between both of these economies were probably at one of the worst levels in decades. And now that the US is under a new administration, I don't think we can see these tensions going away anytime soon. But now we're seeing, all these tensions going to other fronts like human rights and I guess technology now. So my question for Tai is, how long should we expect these tensions to take place? Should we expect any de-escalation at some point?
Well, I think this tension is not going away anytime soon because China is probably one of the few topics where the Republicans and the Democrats agree with each other. So, I mean, just this week, if you look at the US Senate, it's passed a legislation that really provides more than $250 billion to help to maintain a competitive edge over China on areas like AI, like quantum computing and semiconductors. So, just imagine President Biden is struggling hard to get another American jobs plan passed, but yet, this bill against China or against the competition of China went through with very little resistance. So I think that tells you the political backdrop in Washington on how they view China. So whether, is President Biden or another president, a few years down the line, I don't think that relationship is going to change significantly. I think what's different is the way that Washington is handling Beijing right now. So if you look at President Trump, obviously there were a number of policies like tariffs, like banning certain apps or software services, with or without really solid grounds. I think where President Biden is different, I think at least he's trying to be a little bit more fact-based when it comes to his policies towards China. And at the same time, take into account of the potential economic impact on the US economy itself. Because if you look back to the several rounds of tariffs that President Trump imposed on China, it didn't really help to improve the trade relationship or the competitive position of the US exports, but instead it created a lot of troubles for US companies, for US consumers, and that wasn't great. That actually almost started the recession. So I think from that perspective, from an investment standpoint, the good news is that President Biden is taking a more pragmatic approach when it comes to applying pressure on China to make sure that it doesn't shoot itself in the foot. But at the same time, as you rightly pointed out, the areas where China and the US are locking horns is no longer just on issues like trade or commerce, but more into areas like geopolitics and also, human rights issues. I think another different way of approach by President Biden is that it's no longer US going it alone. President Biden is very keen to gather support and sort of regroup the allies in order to have a much greater weight in countering China's development. So if you look at the past couple of months, we've had the Prime Minister of Japan visiting Washington. We have the President of Korea visiting Washington. So from that perspective, he's very much trying to lobby both his Asian allies, and he's now flying off to Europe to gather the European allies as well. So I think from that angle, I will be a little less concerned about the economics, the trade war escalating, but certainly there are other areas where the tension is going to remain very strong.
Perfect, thank you. And then for Pruksa, how do these concerns around US tensions, how do they affect your investment approach? Should investors in China be more cautious around certain sectors, or they should disregard it?
Well, I think we certainly shouldn't disregard it because it shapes the operating environment and investment opportunities in these sectors. I would say the right two words that describe our stance is selectively cautious. So we are cautious, we are selective, but then we felt that if we do our homework and make sure that we dissect what all these regulations actually means, there are investment opportunities. So if you talk about technology within the US-China tension, then semiconductor, especially in the areas of advanced semiconductor, is at the crossfire essentially. So that's where the biggest tension lies. And that's where we have seen, I think, a lot of regulatory announcements from the US over the course of the last 18 months. So you can imagine that we have been very busy to try to see which companies and which part of the value chain we can play. And I think the key in us being selectively cautious is that for us, we want to be able to invest in companies that have a profitable business model over the long run. And that means that certain parts, and even, you know, when we see localization in China, which is a big opportunity that's emerging out of this US-China tension, back to Ty's point about how, as a result of what we see, China is actually moving towards more self-reliance, and self-reliance in semiconductors is going to be a big agenda and will continue to be a big agenda in the current 14th five-year plan and going forward as well. And I think they will take some time to bridge that gap within the semiconductor space. But there are a lot of opportunities in terms of localization within the semiconductor space in China. And we think where China can localize profitably is actually in the mature technologies. So places like power management IC, for example, and we are seeing this localization happening across different segments of the tech sector as well, whether you look at the components that go into PC, the components that go into electric vehicles, components that go into servers. And all these spaces are very much dominated by multinational companies in the past. But today, where the technology makes sense, they are looking to localize. So to share an example again of a company that we invested in, and what they told us, this company is an IC design company. So they design semiconductor chips. Part of their business is power management IC or PMIC. And what they are saying is that, you know, in the past, design development process with their customers tend to take 3 to 5 years to go into new product development. Today, it is going to take 1 to 2 years. So you can see that the product development time has shortened, and they are getting access to customers that perhaps in the past they say, you know, don't come and look for us. There's no reason for us to switch. But today they are like, okay, show us what you have and we'll try to work together and we'll try to get there as quick as possible where your technology permits. So I think there's a lot of opportunities happening within the localization space, but I think we got to be cautious and selective as to which is the one that we can localize profitability so that we have a sound investment thesis. So, you know, with every danger, there's always an opportunity. As you know, there's a Chinese saying called 危机, which means that, you know, with every danger, you get opportunity. There's always two sides of the coin.
I'm on mute. Sorry, I keep forgetting about that, but perfect. Thank you. And you're right. There are always two sides of the story. Where there are risks, then there are opportunities as well. I want to go back to a topic that Ty mentioned earlier, that onshore Chinese equities are not very, have low correlation to what's going on in global markets, right? And just to clarify again to the audience that onshore markets or A-shares are the ones that are negotiated in Shanghai and Shenzhen, right? Not the ones that are in Hong Kong. So now global markets, well, global investors are all debating about inflation, right? Especially US inflation. Tomorrow we have the CPI in the US and everybody's talking whether this is transitory or not. What are the next steps of the Federal Reserve? So do you see this debate around, you know, the rise of long-term interest rates, especially in the US? How does that affect Chinese equities in general? So you did say that it's not very correlated, but do you think there is in the margin some relationship there? Can we see a correction there as well? Or can we use maybe Chinese equities as a protection against this inflation debate? Maybe Ty.
Sure. I do think that you know, it would be wrong to say the US interest rate environment have no influence on China. But if you look back to pretty much 2021, is some of the local factors that we've mentioned at the start that was driving the performance of Chinese equities, both in Shanghai and Shenzhen, and to some extent in Hong Kong and the US. So from that perspective, you know, we do monitor US interest rates very closely. How does that impact on Asia and really global sentiment? But, you know, I have a stronger confidence in predicting what's going to happen today in Hong Kong by looking at what happened in the US overnight than the onshore markets in Shanghai and Shenzhen. That said, I think a couple of things to bear in mind. One is, I still think that a higher rate in the US is indicating a stronger economy in the US. And what that means is demand for exports from China, from other parts of the world, is likely to remain strong. So that's actually good news for the global economy. And number two, if you think back to some of the inflation concerns that Pruksa mentioned earlier, yes, we've seen PPI surge significantly in China in the month of April. But at the same time, we've seen a rotation occurring in China, just like we've seen in the US. So some of the value and the cyclical sectors have really made some very strong improvements in performance in the past 6 months compared to the tech and growth sector, which were both a little bit expensive, but also the regulatory changes have put pressure on them. So again, from that perspective, even if I do think that we're going to see higher rates in the US in bond yields over the next 6, 12, 18 months, that to me is going to continue with this potential rotation in value and cyclical sectors, not only in the US or global stocks, but potentially in Chinese equities as well. So I think, while I am optimistic on the overall markets in China, I think, we need to be bearing in mind the different sector selection and a style that tends to do well in a rising interest rate environment. Again, not just in the US, but we've seen policy normalization taking place earlier in China, even though the central bank did not raise rates this year, but we have seen a slowdown in credit growth by instruction or by direction. And that in itself is almost like raising interest rates. So I think, what happened in China may be an interesting case study for the rest of the world when other central banks like the Fed or the ECB start to think about normalizing policies. So yes, I do think we can have a bit of a diversification benefits by investing in China. But I think many of the dynamics that's happening in the US and China are actually very similar.
Perfect. And then Pruksa, Tai gave a very complete answer. And Pruksa, if you have any additional comments, feel free.
Not really. I think I do concur with Tai's comments. And I think one thing I would like to add from an investor's perspective is that, like Tai say, China seems to have started the policy normalization path. And therefore, from an investor's perspective, we feel that, hey, they are actually ahead of the curve. And therefore, a lot of that risk in terms of rotation and inflation scare has already started ahead of what's happening in the US. So from that point of view, it's longer development for the longer, it's a healthier development for the longer term. Slower growth also means that, when they talk about reducing leverage, when they talk about trying to regulate certain industries as well, that means a much better longer term development. So yeah, we understand the risk, but we are positive on what this means over the longer term.
Thank you. Now, switching to another topic, it's more around COVID, since still an ongoing disease going on. And we talked about this before, right? And like most part of the world, China reopened the economy very quickly. And because the government was able to control the spread of the virus very, very well, right? Different from most places in the world. But now it seems like they are in a tricky situation. So it seems like they can't reopen their borders because they are quite behind vaccination compared to other countries. Even though they have reopened their activities domestically, people are not immunized enough to open for other people to come in. Do we see any risks in China, being isolated from the rest of the world while other major economies are restarting their international travel? Tai, do you want to start?
Sure. Actually, I think if you look at the latest vaccination numbers, China has really accelerated its progress in the past couple of months. So the latest official numbers is that about 800 million doses of vaccine has been applied to the Chinese population. Our estimate is that around 40 to 45% of the population have received at least one dose. So, they've caught up with the likes of the US and the UK quite quickly. But I think you're right. I think reopening the borders is still some way away. But from my perspective, that's probably less of a concern for China compared to some of the more small open economies in other parts of Asia, like Hong Kong or Singapore, which the tourism industry does play quite a prominent role. So if you look at a lot of the macroeconomic data out of China, I would argue that with maybe the exception of international flights, most economic data in China are back to the pre-pandemic level of activities sometime late in 2020 or early 2021. So because of the large domestic economy, China is able to grow at the trend rate now that we've recovered a lot of the lost ground of 2020. That said, I think we still need to monitor COVID risk. So for example, in the last 2 weeks, we've seen a outbreak in Guangdong province, which is in the southern part of China, right next to Hong Kong, and where they have to apply a bit more of a lockdown in some of the towns or the cities. And there are concerns that because Guangdong is a very important manufacturing hub, as well as a logistic hub, could that create some degree of disruptions to global manufacturing or some of the shipping, which already we've seen, as you know, shipping rates have gone up substantially in recent months. So I think, does it really undermine the pace of recovery in China? Because vaccination is only progressing, we're not quite there yet, probably not. But sporadic outbreaks in different parts of China could have a global implications if that means some of the production or some of the logistic industries comes under pressure.
Thank you. And then Pruksa, if you have any comments on how you are approaching this view of this low vaccination in China.
Yeah, sure. So as per what Thai say, I think China is catching up really fast in terms of vaccination. So the latest figure I saw is that by September, the vaccination rate would be very much on par or one month behind that of the US and Europe and the UK, which is a really quick catch up. So from that perspective, we don't think there's that much difference in terms of vaccination rate. But the key difference is that China has a very large domestic economy. And again, back to the focus of the 14th Five-Year Plan and the increasing self-reliance, boosting domestic consumption has been one of the key themes that we saw that will be structural this year and going forward as well. And we are continuing to see encouraging results from that, from the companies that we own within the domestic consumption space. And that's where we continue to see big growth opportunities that doesn't really depend on the Chinese opening up of their borders. We are seeing increasing tourism, domestic tourism within China itself. And as we know, China itself is really large. So you can travel from, whether you talk about traveling from Guangdong to Hainan Island, for example, and that's where we continue to see strong, robust consumption. So I think we remain pretty positive there.
Okay, thank you. We do have about 10 minutes left. So I have one last question for you guys. And this one is not so much on Chinese equities, but it's actually on cryptocurrencies. So I think it's hard not to get into a conversation and not talk about cryptocurrencies nowadays. And China does have a pretty important role, right? Especially in the mining process of these cryptos. We've seen these digital currencies prices react to the announcements from Chinese authorities about mining and also preparing to launch their own digital yuan. So do you guys have any views about how Chinese authorities are approaching this crypto mining, and also what they plan to do with the digital yuan? Pruksa, do you want to start?
Yeah, sure. I think this touched on a few points that we mentioned earlier. So basically, if you want to understand why Chinese government talks about curbing the mining activities of cryptocurrency, there's two main reasons. The first is that it is very energy consuming. So, and a lot of this mining actually happen in places where there are cheap electricity. So things like Inner Mongolia, for example, is there we see a lot of cryptocurrency mining activities. And post the 14 5-year plans, every local government has their target to meet. And therefore, from that perspective, using your power quota for cryptocurrency mining that has the benefits elsewhere may not be that aligned in terms of carbon neutrality targets by the local government. So from that perspective, it's not that energy efficient to be using this, and it's not as productive to the economy. The second part is that there is quite a real fundamental difference between cryptocurrency and digital yuan. Cryptocurrency is decentralized, and digital yuan is centralized. And what that means is that one is in the control of the PBOC, and one is not. And in particular, the digital yuan, if you understand the process, is basically very much issued by the central government, distributed by the large commercial banks, and then the intention is to really replace the physical cash that is circulating in the system. So you can think of it, it's the same as the banknotes and coins that we are using in China, but it's just now in digital form. And the way to think about that is to, how do you grow this usage alongside with all the famous e-wallets like Alipay or WeChat Pay that the Chinese have been using today. And that's what they have been doing, in terms of developing the end use cases. And within the COVID situation last year, they have done a trial of this as well in certain cities like Shenzhen and Chengdu to see how the process can work. As you know, the Chinese government likes to do mini pilots, and then you launch it out commercially. So I think the concept in itself is quite different, and to me, it comes back to risk management and being able to control the monetary system within China and have, I think, better traceability and transparency on the usage of this digital yuan versus the physical yuan, for example.
Thank you, Tai. I see you nodding, and I think that you agree with everything that Pruksa said. Do you have anything to add?
I think today is great because I think I agree with most, if not all, of the things that Pruksa have been saying all morning. Just really to add, I think, again, maybe just to reiterate, the digital yuan is a tool of exchange and transactions, whereas Bitcoin cryptocurrencies in general, at this point in time, is very much a speculative assets. So I think from that perspective, expanding this discussion a little bit more, again, it's not just China that's going to be developing its own central bank digital currency. Many central banks around the world are looking into this. And at the same time, the regulatory environment for cryptocurrencies is also going to evolve. So, again, while the headlines maybe, or the spotlight maybe have been on China for the past couple of months, but you've already seen the US authorities, even within the authorities, are debating how tight they should be looking to regulate cryptocurrencies. Because, while some of them may be, genuine investors trying to make a return, there are also some transactions that may not be tolerated by any government. So I think from that perspective, what China is doing right now when it comes to developing a digital currency and at the same time trying to regulate or even phase out some of the cryptocurrencies in the private sector, that could well be a trend that we see around the world in coming year or two as central bankers and regulators get a better handle on how to deal with these different developments.
Perfect. Thank you. So we have like 5 minutes. I don't think we have maybe time for another question. So I guess, can I leave the floor for you guys to leave any final remarks that you may have about investing in China for our audience? Remember that we are a Brazilian audience, so China's very far from us. So it's very clarifying to hear these comments that you have for us to have a better understanding of what's going on in the market there. Pruksa, do you want to start with some final remarks?
Yes, I think we talk about the short-term opportunities in China, but I think I would like to draw everyone's attention to the long-term opportunities in China, which are the 5 mega themes that we talk about, which is essentially aspiration, digital future, healthcare and services, wealth management, and then going green. We think these are longer-term structural themes that will be driving the long-term growth of the Chinese equities markets very much over the long run. As you know, we are bottom-up stock pickers, And within China, we feel that, especially the onshore China A market, it is still very much a retail-driven market. And as we have seen that, going active within this asset class actually pays off over the last few years as well. And that's really because with a very large retail tilt to the market, that means that the market volatility, when that happens, and it happens, the latest one we saw was post-Chinese New Year, and the biggest one we saw was back in 2015. All these mislocations in terms of volatility actually creates mispricing opportunities for long-term investors like us. So it's back to us to making sure that we do our homework, making sure that we use our man on the ground to really understand what the competitive advantage of these companies are. And also very, very important is to engage on the ESG factors. And we want to be able to drive the positive change at companies and be able to benefit from this positive change over the long run, because we really believe that this is really good for the long-term sustainability growth of these companies. So yeah, short-term valuation is attractive, longer-term plenty of opportunities. We are positive on the Chinese equities market.
And Thai?
Well, I wanted to quote a very interesting fact I've read from The Economist over the weekend. In the last 25 years, 19 companies created in the last 25 years have hit $100 billion in market cap. And 9 of them came from the US and 8 of them came from China. So I think that really gives you an idea of the potential growth that we can see out of the Chinese economy. And personally, while I'm in Hong Kong, I speak to my clients in Asia. In the past 12 months, I've been spending almost half of my time with clients in Latin America, Brazil, Chile, and also in Europe and the US, really highlighting some of the opportunities that we've discussed today when it comes to investing in China, but also some of the challenges that we've discussed as well. So I don't think you are too late in the game by looking into China, but certainly I think the trend, the international wave or flows into China is very much ongoing. So hopefully, what Pruksa and I and Jennie have covered today will provide you with a bit of an idea. But definitely, we're seeing a great deal of interest and good questions and pushback on investing in China. But again, I completely agree with what Pruksa has been saying all morning. Being on the ground, looking into the companies individually and understanding their management governance is really the only way to invest in China effectively.
Perfect. Thai and Pruksa, thank you so much for your time here. I guess the bottom line is over the short term, we might see some continuing volatility in Chinese equities, but we all still believe in the long-term themes and the long-term growth story of China. Perfect. Thank you so much. This has been super helpful. And I thank you so much because I know that it's super early there in Asia, so we really appreciate you spending some time with us. And for everybody who's watching, I hope that you guys liked it as well. There is a QR code on the screen, which has a survey for any feedbacks that you may have for us. And just a reminder, we still have more days of the International Week. So please just go to the website and watch the other ones. Thank you, both Thai and Pruksa and the audience as well so much. Hope everybody has a good night and good morning for you guys.
Thank you.
Thank you.